Hi and welcome back to my channel. In today's video I'm going to talk about meme stocks. And what are meme stocks? If you're in the stock market or watch the news, there is a good chance you have heard the term meme stocks being thrown about over the past 6 months. So I'm going to explain what are meme stocks in this video. If it's your first time watching my channel, then my name's Daniel Radcliffe. I'm only messing, but shout out to the people who keep saying I look like him. But on a serious note, my name's Ollie and I've been an IT consultant developing software solutions for the finance industry since 2008, and I've been actively investing in the stock market since 2016. If you enjoyed this video, then I'd really appreciate an early thumbs up, as it really helps with the YouTube algorithm so that my content can reach more people. Also, please subscribe and press the bell icon to be notified of the latest videos, as I upload new content every week on personal finance, investing, and how to reach financial freedom. Please note the information in this video is not intended to be investment advice, and if you want investment advice, you should seek a licensed professional. Also, past performance is not indicative of any future results. If you're not already signed up to eToro and decide to sign up while watching this video, then I have an affiliate link down below this video, which if you sign up using it, then I will get a kickback, and it doesn't cost you anything extra, but it really helps support this channel. So memes are generally funny images, videos, or text that have been copied and shared rapidly across the internet. So what are meme stocks? Because it's such a new term, there's not really an official definition. You could even call it a new type of stock category. Generally, they are stocks that rise for no obvious reason other than the fact that retail investors have piled in to buy them after being targeted on social media. A meme stock is a stock that has seen an increase in trading volume not because of the company's performance, but rather because of hype on social media and online forums like Reddit and the subreddit wallstreetbets. The stock has technically gone viral and the price has shot up as a result, which is generally over a short space of time. Fundamentals like profits, revenue, or leadership are often disregarded on these stocks. FOMO is a big motivation to buy these stocks, which only increases the price surge. Because the price increase is not the result of the company's actual performance, these spikes are usually followed by a crash. Meme stocks have become increasingly popular due to the rise in retail investing, and it's now easier than ever to trade stocks, meaning people can participate in these meme stock surges. Especially when people can buy fractional shares, commission-free, and the ability to trade from your mobile, it's never been easier to buy stocks. Meme stocks are often bought by younger investors looking to make a quick buck. It has also been fueled by COVID and people being at home. With a lack of sports and the inability to go out drinking or go on holiday, many people have extra cash. And with many people receiving stimulus checks, many people have even more cash. And why would you put that in a low interest bank account? In the past, it was typically hedge funds and institutional investors that had the most power in the market. But meme stocks have really shaken this up and shown the power of the retail investors. Meme stocks first came to light in January of 2021 when Gamestop soared 1900% in under a month. It shot up mainly due to the Reddit forum wallstreetbets and other online retail investor communities. The price of GME more than doubled to 347.51 on January 27th, and then the stock reached a high of $483 on January 28th before dropping to close the day at $193. Since then, the investor communities following these stocks has grown massively as wallstreetbets has been thrown into the limelight. The wallstreetbets subreddit is now at over 10.6 million subscribers, more than 5 times that at the start of the year. Gamestop was a heavily shorted stock, which means it's a stock where people are betting against the price doing well, and those investors shorting it will do well if the price goes down. Wallstreetbets investors wanted to stick it to the big hedge funds and make them lose money. You could almost see it as a battle between retail investors against Wall Street and the hedge funds. Some of these investors were trying to make a point because people often think short selling is unethical, bringing a company's share price down, whereas others were just trying to ride the wave. Anyway, the surge of retail investors buying caused something called a short squeeze. If you don't know what short squeeze is, then for example, hedge funds can borrow stock and sell it on with the expectation the price will fall. If the price falls, they then buy it back cheaper and return it to the broker that lent them the stock, and then the hedge fund cashes in on the profit. But if the price rises while they are shorting, they need to quickly buy the stock back to close out the position, which in turn, this demand raises the price further. Say a hedge fund short sells 1,000 shares at $1 each. costing them $1,000 originally. The price then rises to $5. They then need to quickly buy the stock, generating the hedge fund a loss of $4,000. Shorting stocks is dangerous and losses can be infinite because prices can go up forever. This is why short sellers scramble to buy the stock when the price starts going against them. For most investors, meme stocks won't make a difference to them unless they jump on board with these specific meme stocks. For short sellers, you better watch out. This makes so-called meme stocks a lot riskier and volatile than many other stocks on the market. So what makes a meme stock a meme stock? Meme businesses are often struggling and they are businesses trying to make a turnaround, which means they have little or no current profits. They are often heavily shorted by institutional investors. They are often smaller brands such as GME, AMC, or Bed Bath & Beyond, or even once well-known technology products companies such as BlackBerry or Nokia. They often have small market caps, so this makes it easier for the retail investors to move the price. For example, GME had a stock market value of just over $1 billion before its spike. What is the life cycle of a meme stock? One user on wallstreetbets explained these 4 phases of a meme stock. Early adopter phase. Early individuals believe a particular stock is undervalued and begin to buy. The stock's price slowly begins to increase. Middle phase. People who are paying attention begin to notice the increase in volume and more individuals then start buying. And the stock's price rockets. Late/FOMO phase. Word about the stock has spread all over social media and online forums. More retail investors join in with FOMO. Profit-taking phase. After a few hours or days, buying has peaked and early adopters begin cashing out. Just like the buying phase, the selling phase becomes a chain reaction as people fear losing money and so the price goes down. If you're an early investor in a meme stock, you could stand to make crazy returns, but this also comes with a huge amount of risk. Are meme stocks safe? Not a chance. If you want a gamble or a swing trade, then that's up to you, but be prepared for the price to drop just as quickly as it goes up. It can almost be seen as a form of day trading, and you've got to remember that 95% of day traders lose money. Meme stocks can go to the moon and back in just a few hours, days, or weeks, so if you're getting involved, then be very prepared to lose it all. Whether or not meme stocks are here to stay, one outcome of the meme stock saga is that there is an increase in interest in retail investing. New downloads of stock trading apps skyrocketed after the events surrounding Gamestop. The Robinhood app was downloaded more than 1 million times in the last week of January as the stock surged and then later declined according to various media outlets. I personally see this as a good thing, as more people investing means stock prices should hopefully go up overall as there is more demand for stocks. So I hope you enjoyed this video. If you've got any questions on this video, then please let us know in the comments. Let us know if you've bought into any meme stocks, and if so, how much profit did you make or did you lose money? Please let us know. I'd love to know, and I read all your comments. If you found this video helpful in any way, then please give it a thumbs up, as it really helps support the channel. Also, for those of you interested in signing up to eToro and haven't already, then there's an affiliate link down below the video, which if you sign up using it, then I will get a kickback, and it doesn't cost you anything extra, but really helps support this channel. So why not give eToro a go before depositing any real money, as they will give you a demo account with $100,000 of virtual money, where you can experience all of the features like copy trading without losing any real money. Also, if you want to learn more about personal finance and investing, then I have numerous videos on my channel, so I recommend you go check them out, and please subscribe and press the bell icon so you don't miss out on any future updates. It's been Ollie from Get Geek Finance. Thanks for watching, and I'll catch you in the next one.